Hey, everybody. So I wanted to go ahead and give an update with regard to last week's action and some of the positions that I took on and why. What was my thought process? So if you were looking at the markets last week, particularly at the end of the week, Thursday, the markets were down over 1,000 points at one point. And I think on Friday, the markets were down over 450 points at one point, retraced a little bit, came back and closed still in the red. However, we made money. How is that? Well, again, comes back to psychology of the marketplace and understanding the market, understanding, catalysts behind different types of trades and investments. So three stocks that I was really looking at was Apple, Netflix, and Skyworks. Those were the three stocks that I had on my mind for last week. And I knew that if they came down to certain areas, I was going to go ahead and make a trade of some type. So the first one I want to talk about is Apple. Most people know that Apple just recently, when it got over $400 a share, did a 4-to-1 split. And why does that excite me? Well, typically when a company does any type of a split, it's usually to attract more investors to make an investment and become shareholders. Understanding that, so it lowers the price point. In this case, on a 4-to-1 split, so the stock went from over $400 a share to a little bit over $120 some odd dollars a share. And what I see it as an opportunity where over the next 18 months, and the reason I say 18 months, because historically, when a stock does a split, it typically takes about 18 months. Sometimes it could be less, sometimes it's a little bit longer, but it's on average about 18 months for the stock to reach back up to the price point that it was previously trading at before the split. So I'm going to keep eyeballing and trading in and out of Apple as that stock continues to go higher. I think it's going to go higher, in my opinion. And I did so on Friday. So when the stock pulled down, the market pulled down 1,000 points to the downside, I took a look at it. I said, well, let me see if the market settles down and finds some ground. And it pulled down again on Friday as well. And I looked at Apple. I saw that it was at a baseline of support and I think it's critical to take a look at not just fundamentals, but also taking a look at technicals, because that gives you insight into, where buy points were, where sell points were. And it pulled down to about, I had written down in my notes that if it pulled down to about 114, 115, I was going to go long Apple. And Apple did that. Apple pulled down to a little bit over 114 during the day on Friday. And I started going long and picking up positions on Apple. And I think on Friday, Apple closed out at about 120 and some change. And I see Apple going much higher from here. So I kept the trade over the weekend, over the Labor Day weekend, but I kept it with protection, meaning that I went ahead and I bought insurance on the portfolio just in case something happens and Apple pulls back down to the downside, even just a little bit. I'm looking to make money and offset the temporary loss that I feel that I'll take on the long position. I don't think that's what's going to happen, but I wasn't willing to take the chance. So I put insurance on the portfolio on Apple. And I did the same thing with Skyworks. Skyworks pulled down to a level that I thought was just an incredible buying opportunity. And with the whole onset of 5G and the Internet of Things coming out, and speaking of Apple, if you own an Apple, phone or a MacBook Pro or MacBook Air, they have Skyworks technology inside the Apple computers and the Apple phone. And typically, people that when you have things at home, your electronics at home, you're probably using Skyworks at some point, and you just don't even know it. So I see Skyworks as being a huge opportunity for upside growth in the stock. And when it pulled back down to a certain level, I looked at it and I thought to myself, this is an opportunity for us to go long on Skyworks. And I did just that. Went long on Skyworks, but I didn't do it without protection because I knew I was going to hold it throughout the weekend. And anything that happened during the weekend, we can't control what the market's going to do. So I went ahead and I bought insurance on Skyworks as well. The only company I didn't buy insurance on was Netflix. And there was a number of reasons why I didn't do that. Number one, I really liked the chart on Netflix. So that was the third company that I went long on. A lot of analysts, they like Netflix and they have price targets anywhere between $550 to $600 a share. I see Netflix going higher. I don't need it to go to 600, although I would love it for it to go to 600 with my current long position that I have on. But it also had what we call in the derivatives world, in the options world, very, very low implied volatility. And it's starting to move in an upward direction. So with that being said, I looked at it as an opportunity, and I didn't buy as big a position that I did on Apple and Skyworks, but I didn't feel the need to put insurance on Netflix on that particular position. But so we'll see how those three trades roll out. And then there's another trade that I'll be looking to get in on Tuesday. And if you're interested, take a look at the video that's going to follow this one, and you'll see which stock I'm taking a look at, my reasons for it, and kind of the strategy I have in mind where I can make money even if I'm wrong on the direction on this particular stock. So hopefully you enjoy it. Take care, and I'll talk to you next time.